Welcome to Conversations. I'm Suresh Kochatal. Today we look at the global economy, foreign direct investment, and the rise of global capability centers. The city of Hyderabad is no longer known only as a city of information technology and pharmaceuticals. It is increasingly becoming a strategic destination for some of the world's largest companies, a place where multinational corporations are building global teams and developing new technologies, managing international operations, creating high value intellectual property. At the heart of this transformation is a rapid growth of the global capability centers, or GCCs as we know them better. But behind Hyderabad's rise as a global business hub is much a larger story, one that connects Telangana to India's foreign policy, trade agreements, investment strategies, export infrastructure, and the changing dynamics of the global economy. As companies diversify their operations across countries, India is emerging as one of the key beneficiaries of that shift. And Hyderabad is positioning itself to capture a growing share of that opportunity. For years, Hyderabad's economic growth was closely associated with information technology, pharmaceuticals, and business process outsourcing. But the nature of that growth is changing. The city is moving steadily from being a destination for relatively low-cost back-office services to becoming a center for high-value, knowledge-intensive global operations. Multinational corporations are increasingly using Hyderabad not simply to reduce operating cost, but to access skilled professionals, advanced digital infrastructure, and specialized expertise. This is where global capability centers, or GCCs, have emerged as a major force. These centers are becoming an important part of the global corporate ecosystem, with Hyderabad increasingly playing a central role. A GCC can be much more than a conventional corporate office. Today, global capability centers in India can manage sophisticated functions ranging from cloud engineering and artificial intelligence to financial compliance, cybersecurity, data analytics, research and development, and of course, intellectual property creation. In other words, the work being carried out in Hyderabad can directly support a company's global operations. A financial team here may manage compliance for multiple international markets. A technology team here may develop a cloud platform used by customers around the world. Data scientists may build predictive models. Engineers may work on products that are eventually deployed across continents. That represents a significant change from the earlier outsourcing model. In the earlier phase of India's technology stories, many international companies established operations primarily to handle back-office operations and business process outsourcing. The attraction was straightforward: a large English-speaking workforce, lower operating cost, and a growing services industry. But over time, India's technology ecosystem became deeper and more sophisticated. Universities expanded beyond talent pools. Digital infrastructure improved. Technology companies developed specialized expertise. And multinational corporations began to recognize that Indian teams could contribute not only to routine operations, but also to strategy, innovation, and product development. Hyderabad has benefited significantly from that transformation. The evolution can be described in three stages: from back-office services to specialized technology operations, and now to global innovation and corporate functions. The evolution has important implications for Telangana's economy. High-value GCC operations require specialized professionals. That creates demand for engineers, financial experts, software developers, data scientists, cybersecurity specialists, researchers, and managers. The result is an expanding knowledge economy with the potential to increase productivity, wages, and investment. But Hyderabad's emergence as an international investment destination does not happen in isolation. It is connected to India's broader economic and diplomatic strategy. Foreign investment decisions are influenced by more than the availability of skilled workers. Global companies also look at political stability, regulatory clarity, market access, infrastructure, and the ability to operate across borders. This is where national level economic diplomacy becomes important. India's trade and investment relationship with countries across North America, Europe, and East Asia help create a broader framework within which businesses make long-term investment decisions. Bilateral trade agreements, economic partnership agreements, and investment promotion platforms are designed to make cross-border business more predictable and attractive. For international investors, that predictability can be critical. A multinational corporation making a major investment is usually thinking not just about the next year, but about the next decade. National investment promotion initiatives also play an important role in connecting international capital with opportunities in India. Platforms such as Invest India are designed to help investors understand India's business environment, identify investment opportunities, and navigate different stages of establishing operations. For states such as Telangana, these national mechanisms can complement their own investment promotion efforts. The result is a multi-layered investment ecosystem. Diplomatic relationships operate at international level. National policies establish the broader economic framework. State governments compete to attract investment. And cities such as Hyderabad provide the talent, infrastructure, and business environment needed to turn investment commitment into operational centers. Infrastructure is a critical part of this equation. For a global corporation, a location needs more than office space. It needs reliable telecommunications, digital connectivity, transportation, commercial real estate, access to skilled worker professionals, and of course, a wider ecosystem of technology and professional services. Hyderabad has developed many of these capabilities over the past 2 decades. Its technology corridors have attracted major international companies, while the city's expanding professional workforce has helped create a strong ecosystem around them. That ecosystem can itself become an attraction for new investors. The more global companies establish operations in a city, the deeper the talent pool becomes. And as the talent pool expands, the city becomes more attractive to additional companies. It can create a cycle of investment, employment, and of course, innovation. At the center of this cycle is foreign direct investment, or FDI as we know it. FDI is more than money entering an economy. It can bring technology, management expertise, international business networks, and access to global markets. For Telangana, investment associated with technology, pharmaceuticals, engineering, and advanced services can strengthen the state's integration with the international economy. And the impact can extend beyond the companies receiving this investment directly. Local suppliers, professional service firms, logistics companies, real estate developers, and technology vendors can all benefit from this increased business activity. Telangana's international economic story, however, is not limited to services. The state also has significant capabilities in pharmaceuticals, life sciences, engineering, and other export-oriented sectors. For these industries, competing in global markets requires more than producing a quality product. Companies also face risks associated with international payments, taxes, logistics, and market conditions. This is where India's export support infrastructure becomes important. One component of that system is the Export Credit Guarantee Corporation of India, or ECGC, Exporters can face serious risk when selling to overseas customers. A buyer, for example, may delay the payment. A customer may default, or unexpected political and commercial developments in a foreign market may affect a transaction. Export credit insurance mechanisms help reduce some of those risks. By providing protection against specified commercial and political risks, export credit support can give businesses greater confidence to pursue international markets. For smaller and medium-sized exporters in particular, risk protection can be an important part of expanding overseas. Another part of the export ecosystem is the government's broader effort to improve competitiveness of the Indian products in international markets. The remission of duties and taxes on exported products, or RODTEP scheme, is designed to address certain embedded duties and taxes that are not otherwise refunded or credited to exporters. The principle is straightforward. If domestic taxes and duties remain embedded in the cost of an exported product, Indian exporters may find it harder to compete with international suppliers. Remission mechanisms can help reduce that burden and improve price competitiveness. For sectors such as pharmaceuticals and engineering, as well as other export-oriented industries, such measures can contribute to a more competitive international position. The wider ecosystem connects local production to global demand, and it also demonstrates how different elements of the economic policy can work together. Investment policy can help bring capital into the country. Trade diplomacy can help improve market access and investor confidence. Production and export incentives can strengthen competitiveness. Credit insurance can help manage international payment risk. And state-level infrastructure and talent can provide the foundation on which companies operate. For Hyderabad, the most significant opportunity may be the convergence of all these forces. The city already has a strong technology identity. It has a large pool of skilled professionals. It has an experience of working with multinational corporations. And it is increasingly attracting high-value corporate functions. That creates the possibility of Hyderabad becoming not simply an outsourcing destination, but a strategic global business center. For Telangana, the economic benefits could be substantial. More high-skilled employment can increase household incomes. New corporate investments can create demand for commercial infrastructure. Technology partnerships can strengthen local innovation. And a growing international business ecosystem can generate opportunities for domestic companies as well. But the GCC opportunities also comes with its own challenges. Global competition is intense. Cities across India and around the world are competing for the same multinational investment. The next generation of GCC will require increasingly advanced skills. Artificial intelligence, automation, and rapid technological change are already transforming the nature of corporate work. That means the future competitiveness of Hyderabad will depend not only on attracting companies, but also on continuously developing its talent base. Education, professional training, digital infrastructure, and innovation will become increasingly important. The question is not longer simply whether Hyderabad can attract global companies. It's also the question whether it can continue to provide the skills and the ecosystem those companies need as their operation becomes more sophisticated. The broader global economic environment is also changing. Companies are increasingly looking at ways to diversify supply chains, distribute operations across regions, and build resilience. That creates opportunities for countries and cities capable of offering a combination of talent, infrastructure, market access, and political stability. India is well positioned to benefit from this trend. Hyderabad is emerging as one of the leading cities seeking to convert that global shift into a long-term economic growth. The rise of Hyderabad's global capability centers tells a much bigger story than the growth of corporate offices. It reflects the changing geography of global economy. Capital crosses borders, technology connects markets, companies distribute knowledge and expertise across continents, and cities compete to become places where that global activity is concentrated. For Telangana, the opportunity lies in turning international investment into economic value. For Hyderabad, it means moving further up the global value chain, from providing services to creating knowledge, technology, and innovation for the world. And for India, the expansion of GCCs represent a broader shift in how the country participates in the global economy. The next chapter of Hyderabad's growth may therefore not be defined simply by how many companies arrive. It may be defined by what those companies build, what knowledge they create, and how deeply their global operations become connected to the city's economy. As international corporations continues to rethink where they invest, innovate, and operate, Hyderabad is positioning itself for a larger role. From a technology destination to a global capability hub, the city's transformation is already underway. And as the global investment patterns continue to evolve, the competition among Indian cities to attract the next generation of high-value global capability centers is likely to become even more intense. For Hyderabad and Telangana, the challenge is now to convert this momentum into sustainable, high-quality growth and strengthen their position in an increasingly interconnected global economy. Thank you for watching this video. Please like, share, and of course subscribe to my channel. Jai Hind.